right, tech stocks had a really rough day yesterday with big names such, of course, Facebook leading the way, down 25%. But it wasn't just Facebook, right? I mean, there were a lot of other names that were blamed for bringing the NASDAQ down. Joining me now, Rob Luna, Facebook, Amazon, Microsoft, Apple, and NVIDIA. Those names were half the losses in the NASDAQ yesterday. So to me, it underscores something we've talked about, how these indices are just kind of skewed, if you will. But it also, I think, is why this is a stock picker's market. Do you think that that's still the case, Rob?
Oh, yeah. I mean, absolutely, Charles. I mean, we talked about it last week. If you're going into technology, you got to be able to be in some of those names that are going to be resilient. We talked about Palo Alto Networks and ServiceNow. Why? You always need cybersecurity out there. ServiceNow, actually, as the economy slows down, those are the names that people put into their company to displace people, unfortunately. But then you look at the other side, like Facebook, and yes, I personally was a victim of that atrocity yesterday also. If they miss it all, it's been an absolute woodshed moment for those stocks. So you have to be very selective in the stocks you're putting in your portfolio right now.
Now, even to that point, it's rare you can see a stock up 59% and it still can be considered cheap. I mean, is this a dead cat bounce, or do you start to climb on the train here?
Yeah, I mean, look, Snapchat, I'm not in, Charles. I mean, I completely agree with Amazon. Amazon's been really resilient. And one thing, just a little deal that I've been noticing this year, Amazon was a significant underperformer last year. So right now, their news wasn't that great. They actually guided down a little bit if you look at FX, and that stock's doing well. I think that one's playing catch up a little bit. So you have to look at that Snap on a day where it's up 60%. You know, from my experience, I wouldn't be a buyer today. Give it a couple days. I like what's going on there, but, you know, be careful jumping in here.
The flip side of this, of course, is going back to last year when the 10-year yield spiked, everyone said, you got to be in value. And, of course, the implication is growth names are expensive. Value is, quote unquote, cheap. So I want you to take a look at today's, one of the biggest decliners of today, Clorox. Now, you know, its gross margins plunged, by the way, 33% from 45%. But here's the thing, and what I want to share and teach the audience. This stock was trading at an all-time high with the PE ratio. And so I think there's a lesson to be learned here, Rob, about what is real value, right? I mean, because something is in a sector that's known to necessarily that trades less at a lower PE, within that sector itself, it can be overvalued and therefore a higher risk, can it?
Yeah, no, and that's the thing, Charles, for new investors, a couple things. Value doesn't mean value, and low price doesn't mean a cheap stock. You have to understand that. And because people have been hiding out in these names, it's pushed the valuations up. And so when you look at Clorox, it seems counterintuitive, but that's more expensive than Facebook, which is actually trading at 18 times right now, lower than the S&P 500. And obviously, they have some challenges, but they're going to grow a lot faster than Clorox over the next 2 to 3 years.
All right, so let's talk.
Yeah, I mean, I think the two I really like right here, I haven't talked too much about it, is NVIDIA. I mean, look, if you look at the chip shortage, that's going to continue for quite a while. That stock's been absolutely hammered. And Airbnb is the way of the future. That one's got crushed as well. You've got to go where the fire is, Charles. If you're going into these value names in the safe haven, that's not where you're going to make money. But as an investor, if you buy these names today, you have to realize more than likely you could be down tomorrow. That's just what good investing is doing. Put it away. Give it 6 to 12 months. Don't expect to be rich a day or two from now, because you're not going to pick a bottom.
Yeah. You know, I used to tell people, if you open a top restaurant in New York City, you might invest $5 million. If you had to sell it on day 2, you could get $2 million for it.
Yeah.
If it's a hit restaurant, a year later, you can get 20. That's the way it works.